Did you know one of the biggest lies banks tell us is that our money grows in our bank accounts? While your bank balance may grow due to interest, it doesn't actually grow in value when inflation is soaring. Keeping cash in the bank is actually burning a hole in your pocket. But don't worry, in this video, we'll explore 6 assets that can stop this wealth erosion and help you create intergenerational wealth. First up, let's talk about God's money, gold, silver, and platinum. Money has always been used to store value for the future. But with governments printing more and more money, you never know when the paper money in your wallet will lose its worth. This is why financial experts recommend investing in precious metals. These metals are valuable, scarce, and can't be easily replicated. Before the 1950s, an ounce of gold was priced at just $400. Fast forward to 2023, and the price is over $2,000. And experts predict that by 2032, the price could soar to $10,000 per ounce, 5 times its current value. While cash keeps losing value, gold keeps rising. If you don't want to physically own gold, you can invest in gold ETFs, affordable investment options that let you profit from gold price movements without needing to store the metal. 2. Industrial commodities, raw materials. Next, let's talk about industrial commodities. Precious metals aren't just valuable because of their scarcity. They also have practical uses. For instance, silver is used in electronics, medical equipment, and nuclear reactors. Similarly, metals like cobalt, nickel, and copper are in high demand due to their natural properties. Take cobalt, for example. Since 2020, its demand has skyrocketed due to its use in electric vehicle batteries, and its price has jumped from $20,000 per ton in 2012 to $40,000 per ton in 2022. That's a 100% increase in just 10 years. But not everyone can invest in raw materials directly. If that's the case for you, consider investing in mining companies, mining-focused mutual funds, or even commodities futures to get exposure to these in-demand materials. 3. Safe haven currencies. In today's world of fiat currencies, geopolitical stability plays a huge role in determining the safety of your investments. That's why the rich often keep their money in Swiss banks. Switzerland's stable economy and geopolitical neutrality make its currency, the Swiss franc, a safe haven during times of crisis. For example, during the Eurozone debt crisis and the global financial crisis, many investors turned to Swiss francs to protect their wealth. Even in the recent Russia-Ukraine crisis, Russia traded energy using Swiss francs to avoid U.S. sanctions. While not all of us can open Swiss bank accounts, currency ETFs and forex brokers, like Forex.com, allow smaller investors to gain exposure to strong currencies like the Swiss franc, British pound, or Chinese yuan. 4th, sovereign guarantee. Next, let's discuss the concept of sovereign guarantees. Have you ever looked at a dollar bill closely? It says, "This note is legal tender for all debts, public and private." This has been true since 1971, when President Nixon took the U.S. off the gold standard. Even though no fiat currency is backed by gold, it's considered valuable because it's backed by the government. When you invest in government securities or GSECs, you're relying on the full faith and credit of that government. And governments are the least likely entities to default on their debts. For U.S. investors, Treasury bills, notes, and bonds are a great way to invest in government-backed securities and earn better returns than leaving money in the bank. 5. Value stocks and mutual funds. While government securities are relatively safe, they typically don't offer high returns. That's where stocks come in. Value stocks, in particular, are less risky than growth stocks and tend to offer steady price appreciation and dividends. Researching individual stocks can be time-consuming, but if you're looking for an easier way to invest in value stocks, consider dividend-focused mutual funds. For example, the Vanguard High Dividend Yield Index Fund. Admiral Shares is a great option for retail investors looking for a stable, income-producing investment. 6th, land and real estate. Another powerful asset class is land and real estate. Land is scarce and always in demand, making it a great inflation hedge. As the human population grows, the demand for land, homes, schools, and businesses will continue to rise. According to a Bloomberg study, housing prices have tripled from 1992 to 2020, despite the 2008 housing crisis. Real estate can be an excellent way to preserve wealth when inflation hits. Collectibles, a unique way to preserve and grow wealth. When most people think about investments, collectibles may not be the first thing that comes to mind. But for those in the know, this asset class can be a treasure trove of value. From vintage cars and rare art pieces to handcrafted luxury items and limited edition watches, collectibles are timeless repositories of wealth. Unlike regular cars that depreciate the moment you drive them, vintage cars, for example, increase in value over time. A stunning case in point, the 1955 Mercedes-Benz 300 SLR Uhlenhaut Coupe, which was sold in 2022 for a jaw-dropping 135 million euros, a record-breaking feat. The car's rarity, only two were ever made it a prized possession for collectors. Art is no different. In 2017, Leonardo da Vinci's Salvator Mundi fetched $450 million at a Christie's auction, purchased by a Saudi prince. Pieces like this hold intrinsic value because they're scarce, unique, and timeless. While these high-end collectibles may seem out of reach, platforms now make it possible for average investors to access this exciting market. Online marketplaces like Whatnot allow you to trade items like rare baseball cards, action figures, and comic books. For even more flexibility, platforms like Convey and Masterworks let you invest in fractional ownership of high-value collectibles, making this once exclusive asset class accessible to everyone.